we have a representative from the Risk Management Agency out of the Spokane Regional Office, Thiel. So Ben has lots of experience with federal crop insurance programs. Grew up on a farm locally, so he can relate to a lot of the questions that you might have. And he's going to give us kind of an overview of kind of risk management and cover crops.
Thank you for that introduction, and I've heard crop insurance dropped in a few of the other presentations, so there's always consideration for that with agriculture, certainly in this area, and with non-irrigated production. As mentioned, I guess before I get into anything, my background, so I'm relatively local. I grew up in Southeastern Idaho, so this is still a little bit new to me. I've been in my current position for about 5 years with USDA since about 2002. And so when I go out in the countryside, I still see new things, still get lost, still things surprise me, but I'm enjoying it though. I prefer this to the Midwest or the East, where I also lived at various times. But my background on farming, growing up on irrigated farm ground in Southeastern Idaho, seems a lot different than the Palouse for sure. It kind of seems more similar with the Great Basin, because non-irrigated is just kind of non-existent in Southeastern Idaho. But so in any of our presentations, this is just legalese. We put a disclaimer in, just I guess to protect myself from saying anything wrong or stupid. But all I'm doing is highlighting awareness of crop insurance and our certain provisions. And if anything, hopefully what I talk about triggers interest or questions maybe to me now or to a crop insurance agent, whether you're insured now or considering insurance in the future. So my office geographically represents all of Alaska, Idaho, Oregon, and Washington, so a pretty large area. RMA is a very small agency. We're only about, I think, just over 400 employees nationwide. My office has currently 11 employees. And our role as a regional office is to kind of provide education outreach like I am today. We also set kind of the yields and rates and various other things, and also make determinations of where we offer insurance. Why consider crop insurance? Well, it helps farmers recover after severe weather or low production. Crop insurance only insures natural causes, nothing man-made. It's an affordable risk management tool because partly because it's subsidized by the government, or mostly, that's the primary driver for it. If it was available solely as multi-peril crop insurance in the private sector, it would likely be unaffordable. The private sector long ago kind of deemed it as, it wasn't actually sound to them to do the insurance because there's too much risk involved. It also improves access to credit for producers to have crop insurance. I think it's starting to increase more in this area. I certainly saw in the Midwest, it's nearly almost universal that the finance, your availability or access to credit is driven off having crop insurance. It's part of the overall safety net, and for some producers, it makes the difference. It doesn't make you rich, but it makes the difference when a disaster strikes and stay in business, or at least to pay off the debts that you might have. Crop insurance is unique in that it's a public-private partnership sort of arrangement where RMA designs and develops the policies, and a lot of new policies come from actually unique sort of entities that are in the business of designing new policies for new crops. But we also maintain the integrity and compliance. We also do reinsurance for private insurance companies, and then we subsidize the program. Now on the public side, the side where producers actually more interface is through a independent crop insurance agent who works through what we call approved insurance providers or insurance companies. I mean, there's Rain and Hails, there's RCISs, there's Armtex, there's all these. The companies kind of change, but there's, I think, 14 or 15 companies out there. And so when you get a policy through your agent, the company's underwriting it. The company also has personnel for doing the loss adjustment. And then that information eventually comes back to us. So a lot of times when occasionally producers are asking about certain things on claims individually or said this or that, I won't really know what they're talking about because all those circumstances will be unique to them because I don't see that actual information. Kind of before I go on here, just want to mention, I mean, I kind of geared what I'm going to cover about the interaction of the provisions specifically with cover crops, because there's a perception, sort of why I was brought in or encouraged to come speak, is there's maybe a perception that crop insurance is a barrier to utilizing cover crops, and it depends on your perception. That might have been more likely in the past. The latest Farm Bill might have alleviated some of that, and there's certainly, depending on circumstances you might have in your farming operation, your perception of it being a barrier might still exist, or hopefully I'm able to clear up some things. It was also mentioned in the previous presentation, and I think some others, about not only are we kind of talking cover crops, but also talking about alternative cropping, which might be more than just the standard doing winter wheat every year. You're introducing new things into your rotation, and the adoption of crops sometimes can revolve around the ability to get crop insurance for those crops. So I want to make people aware that there might be some crops that we just can't provide insurance for, and the alternative for that is to go to FSA, and they have a program called NAP that could pick that up. But if we offer insurance anywhere for a certain crop, but we don't offer it in your county, you can go to your agent and at least discuss the opportunity of getting a written agreement to insure that crop. Like whether it's, I mean, I was talking to some folks in the back, whether it's flax, maybe sunflower seeds, or there's some other crops too. We have, my office, or even myself, I'm an advocate of expanding crop insurance where it's actuarially sound, meaning there's kind of some history of growing it in the county by someone. Really, one of the biggest drivers of us doing expansion is that written agreement process. If there's more than one producer that requests written agreements out of that county, that kind of pushes it up on the priority level for us to consider expanding crop insurance for that crop in that county. Also, we want to make sure that we're actuarially sound. Crop insurance, even though it's subsidized, we still operate on a one-loss ratio, meaning the amount of premium that comes in is equal to the amount of indemnity paid out. Now that's program-wide, not to one crop, but we still have to balance things over time. We also cover organic production, and the unique thing with organic production, a lot of times it's contracted, and we can insure you at the contract price, which is usually a higher price, to some limitations. There's also another product called Whole Farm Revenue Protection Insurance that it's a unique product. It would take too long to explain it, but it is a product that can potentially insure, if you're highly diversified, it might be a good product for you because it insures everything on your farm, whether it's insurable by an individual policy or not. So to get to what I'm going to talk about in cover crops, the structure of crop insurance, there's many layers to it. It starts with the Crop Insurance Act as the statutory requirement, and then our agency, through the rules process, promulgates regulations that form your policy, being the top layer is what's called the basic provisions, and you have crop provisions, actuarial documents, special provisions. So you have the basic provisions, the wheat crop provisions. Your county has its own actuarial documents and special provisions. And I'll sort of touch on a little about those provisions for cover crops in the policies. So there was I mentioned earlier, there was a bit of a shift with cover crops and sort of how we looked at them with insurance. So before, with cover crops, there were questions about if you had a cover crop prior to your insured crop, there might have been questions about how did you manage that cover crop? Did you terminate it properly? Now with the Farm Bill, there isn't any questions about the cover crop. Insurance is going to attach on the cash crop as soon as you plant it. However, if there's a claim for that crop and you did have a cover crop, and this is not unique to just cover crops, it's anytime if there's a claim and there's damage, the loss adjuster is going to do the due diligence of verifying that the natural cause that you say occurred to your crop, whether it's hail, too hot, too cold, too wet, too dry, actually occurred. If they see something else where they feel like you didn't adequately fertilize, you did an improper seeding rate, that falls in the realm of good farming practice, and that's sort of the shift now in cover crops. If your cover crop for some reason damaged your insured crop or did something to the insured crop, then it could come back that it's determined it wasn't a good farming practice to do the cover crop, or you terminated it improperly, then it might it could impact the indemnity, but that's kind of an individual case-by-case thing, whereas before it was sort of a broad thing that might have discouraged or prevented insurance. Another change with crop insurance is, and this is certainly applicable to this area with wheat, is the summer fallow practice. In the past, under summer fallow, when you're in your fallow period, you could not plant any crop, whether it's a cash crop or a cover crop, in the fallow year. You were fallow for an entire year. What changed with the Farm Bill, and probably even without the Farm Bill, I was going to make the change anyway, is now we allow a cover crop, if planted in the fall, and terminated by, or it could be, I guess, planted in the early spring too, but you have to terminate it by June 1. So there is some flexibility there. I know in northern Oregon this certainly got utilized because they had extensive fires there that burned up standing ready to harvest wheat. I think upwards of about 40,000 acres, and highly erodible land, no cover at all on the soil, so they needed something. And they're in the summer fallow rotation. The producers knew that if they didn't do something, it's going to really be eroded, but they don't want to be converted to continuous crops. So we were going to allow them, even before the Farm Bill, to still be summer fallow by planting a cover crop in the fall and terminating by June 1. So in the basic provisions, we define a cover crop as a crop generally recognized by agriculture experts is agronomically sound for the area for erosion control or other purposes. And there's this later sentence about a cover crop may be considered a second crop. So in there, you'll notice we don't specifically define cover crops. We kind of leave that open because it just depends on where you're at. A lot of things with cover crops, there's a lot of reliance on agriculture experts. I'm not an agriculture expert. My agency is really agriculture expert. There are others, whether it's NRCS, Extension, universities that are kind of more the agriculture experts, that if there's a necessity to make that determination, you can go to them to say, is this really considered a cover crop? And I only threw this in because that sentence is in that other definition, but when a cover crop is planted after an insured crop, but it's planted for the purpose of hay, grazing, or otherwise harvested in any manner, then it would be considered a second crop. And I don't really want to get into the details of what that necessarily means, but it could have implications in the event that you're prevented from planting. You do a cover crop afterwards, that's fine, but if you were to hay it or graze it or harvest it, that impacts your preventive planting payment. The definition of good farming practice, basically what it means is you're doing all the things you normally would do as a farmer in your area, applying all the inputs, seeding at the proper rate to get the yield, the normal yield for your crop, because that's really what insurance is based on. It's based on your individual history of producing that crop. Moving further on, and I skip over the crop provisions because they don't really say anything about cover crops, and at least for wheat under the small grains, so that's why I skip over into the special provisions. There's numerous statements in the special provisions about kind of cover crops. So one under a heading called practice is continuous cropping. So I just want to recognize that we're a little bit unique in this area. Like in southern Idaho, I mentioned, you just don't, there's not much existence of non-irrigated, but we do make offers for non-irrigated, but we don't split non-irrigated. This is, up here we do split out non-irrigated. And it's to the producer's benefit that we split up the non-irrigated practice into continuous cropping and summer fallow. Continuous cropping is you're recropping every year. Summer fallow, already mentioned, and obviously I think most of you know what that definition is, where you're planting the crop every other year with a fallow period. And I sort of mentioned already that there were, you couldn't plant any form of crop during, whether it's cover crop or otherwise, during that fallow period, because then you would invalidate your summer fallow. Now we have all this language, but we have this exclusion or an exception about cover crops will qualify for summer fallow practice in the current year if a cover crop was planted the preceding year, not hay or grazed, not preceding crop year, not hay or grazed, and not terminated, and also terminated in accordance with the NRC's cover crop termination guidelines. That's important right there because, I mean, a lot of times we're looked upon as sort of the agency. I mean, obviously we make the rules for crop insurance, but we're not the agriculture expert. We rely heavily on NRCS and their termination guidelines, and they play a part as well as far as things that impact you as a producer on what you're supposed to do with cover crops and then the crop you intend to plant after that cover crop. And I'll cover some things in the termination guideline. But this, what I had highlighted there is sort of how you would get to finding those termination guidelines that NRCS has, and that link that's highlighted. This last statement at the bottom under practice, where it says includes wheat after peas, beans, alfalfa, or clover, it sounds really obscure, and effectively what it does, though, is in sort of moderate rainfall areas. It doesn't appear everywhere we have, in every county that we have summer fallow, but in Whitman County and some surrounding counties, we have this statement, and it means that you can, if your wheat that's summer fallow, preceding that was peas, beans, alfalfa, or clover, whether it was insured or not, it's still, that wheat is still considered summer fallow. Because we feel like, I guess the legacy on that is we felt like those particular crops didn't deplete soil moisture as some other crops might. So that's sort of another unique exception, putting aside cover crops. However, I've been a little more liberal about this statement, being that it's not only if that's a cash crop that were those crops, but if it was also a cover crop, irregardless of when it was terminated, the termination of those crops doesn't matter. You can plant and harvest those crops that you'd still be considered summer fallow, where that statement appears in those counties for wheat. In that, so you don't really have a fallow period, even though you could pick summer fallow for wheat, with those crops being the crop that was before the wheat. I'm running out of time, so I'll have to speed up. So getting to the termination guidelines. So the guidelines provide a pre-approved latest end date for terminating crops. So we don't put specific, and this guideline kind of is for the whole country where there's anywhere there's non-irrigated. They'll put dates in when you have to terminate a cover crop before planting the insured crop. And it goes beyond just summer fallow too. But again, it's only applicable to non-irrigated. Some of it has basis in your particular crop system, water availability, conservation practices. But I'll read off the last bullet. The purpose of these guidelines is to provide an additional level of comfort for producers that may be unfamiliar with cover crops and want upfront assurance that their crop is insured and their cover cropping management decisions will be considered a GFP. So in the absence of any guidelines, these are some guidelines that sort of upfront tell you what you're supposed to do. Now there are mechanisms that you can do deviations from that, and that depends on agriculture experts to deviate from that. But again, when you plant a crop after a cover crop, you don't get asked all these questions necessarily up front. It's more of at claim time if there was mismanagement of the cover crop. They also define summer fallow practice in the guidelines. There is some distinction about interplanting and overseeding, interseeding. So interplanting is where you plant two crops together, whether it's two cash crops or if you call one's the insured crop and the other is a cover crop. If you can't separately agronomically maintain the two crops, and more importantly can't harvest the insured crop without harvesting the other crop together, then that falls in the realm of interplanting, and that's usually not insurable. However, overseeding or interseeding, for whatever purpose that might be, does not affect the insurability of the main crop. It's kind of a separate planting method from interplanting, although there can be questions about the timing of it. They can kind of be separately maintained, and the key is your insured crop, you can harvest it. As long as it doesn't damage the insured crop is also key too. Nurse crop sort of falls in the same realm, but usually you're using short season cover crops as nurse crops for kind of specific purposes to kind of help the insured crop along. That's also something that potentially can be allowed. This is our website to find information. Let's go back to that if anybody needs to write that down real quick. That's what a website looks like. It's not the current page, it's a snapshot from a while ago. What was highlighted there is tools is where you're going to find agent locator. Summary business will give you information, probably not as pertinent to individual producers, but maybe to people that do research about what's insured. That'll tell you the insurance levels for certain crops. Actuarial information browser is where you're going to find your actuarial documents and the special provisions. And then down below is that whole farm revenue protection to find information about that. And I want to thank you. I think I'm on a panel later. I went over on time. I didn't.